Good morning, everybody. Welcome to today's episode of Wise Tech for Wise Money. Today's episode is called From Data to Growth, how Gautam Puranik builds scalable financial businesses. And the reason for that title is simple. This conversation is about how real, sustainable growth happens when data, risk, discipline, and customer-centric strategy are aligned. My guest today has lived a reality of the highest levels of two iconic organizations, Capital One and CarMax, helping shape how they use analytics, technology and credit strategy to scale responsibly and profitably. Before we dive in, just a quick introduction. I'm Gary Wayne, founder of A1 Solutions. We partner with financial service leaders to help them navigate AI transformation, automation, and compliance and business growth strategies. Today, I'm joined by Gautam D. Puranik, a former C-level executive of Capital One and CarMax, with over 20 years' experience leading large-scale transformation across credit risk, marketing, analytics, and technology. And now, as an entrepreneur, helping banks and fintech companies grow smarter. Welcome, Gautam. Before we start the show, perhaps you can give us a little bit of history, tell us about your journey, and how you came to where you are today.
Gary, thank you so much. Again, pleasure to be here with you all. And the part that I'll start with in terms of kind of my introduction is where I was born and raised. I was born and raised in the great city called Pune in India. It is close to Mumbai, kind of west central part of India. That is where I was born and raised. It was great kind of upbringing in a big Indian family. And then I graduated with a degree in mechanical engineering, worked for 4 years with Tata Motors, gained some very, very valuable experiences, I would say, particularly in how to interact with customers, how to talk to people, how to build relationships. Those were some of the foundations. And at that point, I thought that I really wanted to study further. It became clearer to me as to what I wanted to study. So I came to the US to get a master's degree in industrial and systems engineering, and went to Georgia Tech. That's been my dream school. It is the top ranked school in industrial engineering in the United States. And it was amazing 2 years where I focused on applied statistics, strategy, and marketing. At that point, I came to work for Capital One, which was a monoline credit cards startup, which was super cool. The word fintech did not exist at the time, but again, very founder-led company. The founders, Rich Fairbank and then Nigel Morris, they both had analyst backgrounds, so very much kind of data-driven its culture, and therefore it was not a surprise that when I interviewed with them, it was like 4 cases, a behavioral interview, very kind of math and quant heavy, and I'm good at math and I'm also good at creativity. And therefore, I was like, this is great. It feels great to use data in order to drive marketing and customize offers to customers. And so that's how I joined Capital One as a data scientist and had 12 and a half years career. Half of my 12 and a half years were in risk and deep analytics, half of that in marketing in the lending environment, where marketing and lending are really intertwined. It's two sides of the same coin, basically. And in my last role at Capital One, I led all of the marketing and in card acquisitions, where I was responsible for both credit and marketing for the company. I also worked on improving digital capabilities for Capital One, improving customer experience for Capital One. These are big passion points for me. And the foundation, Gary, as you kind of talked about, was how can we use data to kind of drive these outcomes, essentially. At that point, CarMax kind of tapped me on the shoulder. Capital One was great, no reason to leave. But CarMax said something unique, which is you can come here, build a team, and help us be to transform from a brick and mortar kind of largest but brick and mortar retailer onto an omni-channel retailer. And that challenge was kind of fascinating. I love building stuff. And then I had almost a 10-year career at CarMax, where again, the foundation of everything was around data, was around technology, was around credit risk because they have a big auto finance business, and then marketing to all had to be stood up for this big transformation to be an omni-channel leader. I was the chief data officer for the company. I had responsibilities for strategy and analytics for 8, 9 different departments, starting from sales to our web strategy. I was responsible for data sciences, data governance, AI, Gen AI, name it. But the point I want to highlight of all of this was really in the service of providing the best possible customer experience. So buying and selling a car, that is was the end objective, right? So I am a kind of a guy who really looks at kind of the outcome, which is to provide this amazing world-class experience, either a full e-commerce experience or in-store experience or some combination. And that was kind of the mission, vision, and purpose and the goal there, which we were successful in to help the company transform to an omni-channel company. So I'll sum it for you as you said it well. The foundation of everything for me is this sort of data-driven thinking, and how can really information, scientific decision making help in doing everything from improving customer experience, improving operations, improving marketing, improving margins, improving even legal, like name it. And that is kind of the basis of what I've believed in so far. And then the last thing I'll talk about is that I had this entrepreneurial itch in me for a long time. I felt like all these experiences, whether it's in credit risk, digital, data science, I can apply them in different clients to solve tough problems. Because one thing I'm kind of thrilled with is tougher the problem, it gives me basically a higher and higher motivation to go solve that problem. The intellectual part, I love that. And consulting, I thought will offer me that opportunity, which is why I kind of started, teamed up with two of the former executives, senior executives at Capital One to start a consulting firm, which is, by the way, called Arica, ARICA. If you're curious, it's partly tongue-in-cheek, like, hey, we want people to Google what it stands for. But one thing it does stand for is basically a beautiful town in northern Chile, which is where kind of the name comes from. So we've been serving fintech and banking clients for over a year. Things have gone really well, work extremely hard on tough problems, and that's been kind of a pleasure to help so many different fintechs and banks to advance their journey. So that's in a nutshell, Gary, my career and my summary.
Fantastic. In fact, I have to be honest, I've never met such a clever, jovial fella.
Oh, thank you, Gary. It's very kind of you to say that.
Most people with your academic ability are very serious. So
Very, very kind of you to say that.
tell me, you've traveled the world, you've come from India, you've settled in America, you've had a bit of a global journey. How has that shaped your view on life, your view on leadership, etc.?
It's a fantastic question, Gary. And the thing that I really believe in end of the day is my sort of general principle is take the best out of different cultures and unite them. That's the core belief I have. I also have a belief on live and let live. Like it's really about each individual, their personality, it's about their beliefs. And just a simple principle of take the best what you can out of these different cultures that I've had exposure to. And then similarly, belief in this live and let live. These are simple principles I live by. As part of that, to just make that point, with my strong Indian heritage and background, there come a lot of great things that are helpful in the business context. As an example, there is a lot of respect for education. There's a lot of respect for hard work. There is a lot of respect for being honest and kind of transparent in what you do. And these are some of the learnings that I really believe kind of come culturally to me. When I came to the US, things that have been very impressive for me is the part around just sort of the common denominator, the ethics that I see in the society, in the US society, at the lowest common denominator, like an individual on an average is very honest. They're not going to kind of throw a piece of trash somewhere just because they can, right? They are careful about where they're putting trash. I'm also noticed things around communication. I would say that my communication style has changed and I would say improved, where the communication style in the US I picked up kind of was around being specific, being succinct, and being structured. And that has helped me in my career significantly. And the third part, frankly, I felt was US as a whole. I've lived in the US for about 25, 26 years, and all experiences have been kind of welcoming. There are a few annoying here and there, but by and large, the country is really open and welcoming to immigrants, and that has been great fabric. So when I put these things in context, I just highlighted for a few traits of the culture that I see, and they help me a lot because I have the sort of Eastern heritage benefit of belief in hard work. I'm not saying other cultures don't have it, but it's core embedded in me. And then that helps me combine the communication part that I talked about, for example, where I'm able to not just talk about complicated technical things like data science, for example, I can explain them in ways that people understand in a simplified way. And if I'm to say like what is sort of the I believe to be a powerhouse is not just being super technical, that's very important. But can you communicate that in a way that people can understand has to be a powerhouse. So that would be even one of my suggestions for any of the listeners is that type of a combination. Try and build that in your career, especially the ones who are starting their career. I would highlight that as an important competency.
You started as a data scientist, but we looked at Capital One and CarMax. You quickly rose to being a leader. How did that happen so quickly?
Again, as always is the case, I do believe in luck. It needs to be there with you. And one minus luck are the things that you are going to control or you can do yourself. One of the things that I'll give you a quick example when I started at Capital One. The thing that happened literally in the first week was I came in, I had this desire to work hard. I won't mind whatever hours I was working. But in the very first week, I started getting myself familiar with the business. And a few different ideas started coming to my head as I was thinking about them as to, well, why are they doing it this way? Why can't it be done this way? This feels better. This does not make much sense. Why is that the case? That led me to ask some good questions right in my first or second meeting with the business partners. Once I asked those questions, got my answers, I was also in that same conversation talking about what could we do differently and why. I understood their rationale and that eliminated some of my questions. But I started talking to them about ways that in which we can kind of make changes and drive business. And the feedback from one of my critical business partners to my boss was, hey, this guy seems like into it. He's got the curiosity, he's got the energy. Not all of his ideas are correct. He is humble enough to acknowledge that this is kind of first week on the job, so not everything is going to be accurate, but I like it. I like what I see. And then he also gave a piece of feedback, which is, by the way, he could work on improving his communication to be succinct and to be on point. It's like, great. My boss gave me that feedback. I accepted kind of what was the improvement opportunity, started working on it. But the reason I tell you this kind of experience was that that's been kind of my leaning always. First of all, I jump into it, right? I'm not afraid to work hard. I'm not afraid to put in the hours. I do not believe in sentences like I'm here for a 9 to 5 job. I'm there because I'm there to make a difference, right? So there is a mindset part that is important, and that has helped me a lot. The second part, the intellectual curiosity, I'm willing to dig in. My education has given me enough confidence that I can dig into anything. And there is literally nothing, that's what Georgia Tech taught me, which is you can do anything from rocket science to like advanced physics to like philosophy. You can do it because you have the intellectual ability. It's a matter of taking effort. So my intellectual curiosity, desire to learn more has always been there, and that helps a lot. And I think the third part of it is therefore kind of really taking action, which is if I see opportunities, if I see improvement that can be made. I acknowledge the success, but I also talk about improvements and how can I be part of improving things as a owner of that business. I keep thinking as to, hey, if I was kind of the sole owner of this business area, what would I do? Like, will I spend my money in this way or not? Right? So the ownership component is a huge one in me, that I'm there to make a difference. And therefore, it really feels to people I work with that I'm not there just to do my job. I'm there to make that difference by being kind of an owner of that business. And then the last thing I'll say is I do spend time in understanding people networks and influencers and politics and everything around that. Frankly, politics at workplace gets talked about as a negative. The reality is where there are humans, there is politics. And therefore, it's best for you to kind of spend time understanding the power structures, influencers. Who do you need to influence? How do you need to influence? The so-called like have a conversation before the meeting with someone you need to influence rather than trying to influence them in the meeting, as an example. So my fourth point there has been that I really spend time on building lasting business relationships. I spend time in strategizing as to how to get my point of view across and who I need to influence. And so couple all of this with the core solid skills that I have, that I self-study, spend time, always keep myself improving. When I kind of have that foundation and these four things sort of on top of it, that really I believe has helped me succeed in my career, Gary.
Are you sure you haven't got a degree in psychology?
Well, it's a topic that I love. I mean, it's amazing. I read about it a lot, and I have statistics training, so that's a big part of
And
psychology.
many intellectuals or intellectual people that you meet, they are great at what they do, but they can't communicate what they know. And I think, from what I'm hearing, one of your major strengths is your communication ability. Going back to Capital One, you rose quickly into leadership. What made that environment such a strong training ground for growth leaders?
Yeah, the thing I would say, first of all, just as I mentioned to you, the founders were analysts, and therefore there is a very clear kind of mandate around. Capital One was founded on what they called information-based strategy at the time, right? And therefore, first thing I would say is the brand and the employer brand of a company, what does that stand for, is really important. And that allowed Capital One to attract people who were kind of quantitatively driven to them to begin with. The second part was kind of the recruiting process. Like I mentioned, very heavy sort of case-based methods. We actually had to solve like a math test and also do behavioral questions, things like that in order to get in. So some 6, 7 rounds of interviews. So a very rigorous recruiting process where no one could get hired unless there was complete consensus around the room and somebody was advocating for that person. So very high, I would say, recruiting standards meant that they hired great people. The third part is the environment and culture. There is a natural inclination. In fact, in the company competency model, there are competencies truly that value someone's innovation, someone's ability to communicate, someone's ability to work with teammates in order to get things done and to drive results forward. And there is a very important competency around what is called integrative thinking, which is in making any decision, you are taking various points of views into account. There is a strict sort of data driven point of view that may tell you something. But at the same time, if, as an example, there is a legislation that's brewing that may impact your decision in a different way, as an example, you should take that into account. If there are operational realities of really something that may be a great idea, but if you cannot execute on it properly because you don't have systems that can execute on it, then it's not a good decision. So one of the core things that Capital One really espoused is this competency model that really help people to be innovative and risk takers, be part of a team, so the teamwork culture, at the same time, the ability to get things done and the ability to think in a kind of integrated manner. So the core competency model really enabled this type of culture where people thrived in terms of kind of what they brought to the table. And then the last thing I'll mention is Capital One did not have any, I would say, like time-based promotion system at all. There was all about how are you doing, what are you delivering, and what's the value to the company, and are you doing it in a way that you're not being a jerk, rather being a good team player, were things that they looked at, which meant that if you are a high performer, there was no one saying, oh, you got promoted in the last cycle, we're not going to promote you. No, you will get promoted if there is a what is called a calibration. If everyone agrees, not just your manager, if everyone agrees that you've done that job and you have crossed the thresholds around the competency expectations, you will get promoted. So that encourage growth leaders to be there and say, hey, I have every ability to rise super quickly. And so Capital One had multiple executives. I was fortunate to be one where I was promoted from entry level to an executive level in 9 years, and many similar, maybe even stronger sort of trajectories than mine is what was kind of unique about what Capital One did.
You led US card originations across all channels with a 9-figure marketing budget. How did you balance aggressive growth with credit discipline?
Yeah, it's a question, Gary, I absolutely love. In fact, I recently wrote an article about it. If you look up, either look for my name on LinkedIn, you will see I pinned that post kind of up top about quote unquote kind of the marriage between credit and marketing. It's a point of passion for me. And again, I'll go back to sort of how this type of ability is ingrained in how Capital One does things, which is, think of it as for a second, right? For the rest of kind of the banking world, it's very hard to talk of risk and marketing in the same breath, right? People talk of it as, hey, there are marketing people and there are risk people. And there is very much a thing around, well, if you're a risk guy, you are not going to be excited about growth. And marketing guys are always going to complain that the risk guy is going to kind of stop the growth from happening. And the risk guy always complaining about people in marketing just want to grow without being really responsible for that growth. And that chasm kind of has existed across the industry for a long time. The way Capital One solved it was really said, I'm going to make my growth leaders, the right ones. There is a very rigorous accreditation process, but I'm going to make my growth leaders risk officers and vice versa, right? Which by definition means that you are going to be held accountable for the growth, but you're also going to be held accountable for signing off on the risk side of things, right? And that's a very powerful statement in itself, because that way I'll think twice before putting forth a strategy that drives tremendous growth, but ends up booking customers that are absolutely ineligible or should be ineligible to get a particular offer. So by really saying you have the gas in a car and you have the brake in a car, you have to use both. And so that's the simple analogy where that was kind of the setup. And so for me, it meant that I was constantly thinking of, I'm a risk professional at heart. I'm probably a bit kind of surprising to some people given my sort of somewhat jovial personality, but I'm a risk leader because that's what I've been trained classically. I know that part very well. But what Capital One ended up doing was they handpicked a small team to really go and build their marketing capabilities. Majority of us had this deep analytical, very risk kind of background. And so it was like, how are these people going to drive the marketing engine forward? And that's exactly where the story is, which is we have the risk mindset, but now we are responsible for driving the growth, which means we look for those opportunities in how we could drive growth. We find new insights in terms of what are we seeing about our customers that we can use from a risk standpoint. And then ultimately, I'm the one going in front of the regulators to explain these decisions on these strategies, because I'm signing off on these strategies In that case, I have the mindset to look for those pitfalls in what I'm doing. And vice versa, I'm not saying no to every single strategy because I'm also responsible for driving the growth. And so that is kind of the mindset that I've had in driving growth. And I drove significant growth for both Capital One, significant growth, 50+% growth at CarMax in terms of kind of its booking and originations at the auto finance business. But they go hand in hand as opposed to kind of facing each other. And that's the mindset that has helped me kind of to lead this type of a growth.
That's fantastic. I think I want to have a look at your post on LinkedIn because maybe we can post it along with this
Yeah.
podcast.
Will be awesome.
Um,
Like you will enjoy reading it, Gary. I'll give you kind of one simple example, even here, right? Just think for a second. For every loan application that you fill out, there are disclosures at the bottom, right? And I will admit, I think majority of us, including me, we fill up the loan application, we just click yes on read the disclosures and boom, hit submit, right? I've gotten more careful these days with the scams and everything that's going on. I check the HTTP header for any email. But anyways, the when I'm applying at say Capital One, a reputable company, their loan application, I know that I'm amongst millions of customers. I have nothing to worry. I'll go ahead and submit. However, there is a group of customers, it's a minority, but there's a group of customers that actually goes and spends some time on the disclosures. And the risk level, you have a guess on what the risk level will be of those who read the disclosures. Do you have a guess? Just take a guess. Is it higher or lower?
Higher.
Well, it's the other way around. The people who read those disclosures, their risk levels are lower compared to average because they are very particular people who take time to understand the terms and conditions, the
They
TNCs,
can't
before
afford to
signing
lose
off
the
anything.
money.
Yeah, before signing off anything, right? And that's just think of like in your circle or in my circle, how many people do that? It's a minority, but those who do, I think, will be the ones that are very particular about the TNCs and want to make sure that they don't get defrauded in any way. So that's a cool insight about what customer behavior is. And if you are able to apply that in kind of your risk setting for decisions that you can do, like you cannot really say, hey, I'm going to approve or decline a loan because someone did or did not read a disclosure. You can't do that. But can you use that type of a risk signal in saying that a customer who takes time to read the disclosures, I'm going to give them a higher loan amount, for example. That's doable. That's legal. And therefore things like that are super interesting, which is what my article talks about.
And very logical.
Absolutely.
You know, you knew, sorry, you uniquely held dual accreditation as both a credit officer and a model risk officer. How did you that shape your view of responsible innovation?
Yeah. Love that question, Gary. The part that I was initially a model risk officer, and then I became a credit risk officer. Again, what?
Can you explain that for the
Yeah, yeah,
listeners?
yeah,
Exactly
absolutely.
the two different roles.
That's right. So, a model risk officer, I'll explain that first. Every financial institution of size, they have variety of risk models. They have valuation models. They have response models. So these are various algorithms that they use for decision making, right? Let's take a simple example. The decision on who to approve for a loan versus not. And then if you approve someone for a loan, what terms do you give them? What is the loan amount? What is the APR that is associated with it? What is the term associated with it? These are the decisions that a financial institution needs to make. The way they make those decisions is at the core of it, there is a risk model, risk algorithm that is used in order to really understand the risk of repayment or non-repayment of a customer who is applying, right? And therefore, people like my type of training, the data scientists, statisticians, these are the type of people who are building these algorithms. The techniques have changed where it's now ML and AI. That's what people talk about. It used to be logistic regression. neural nets, all sort of really part of the different techniques that are used to build these algorithms. Now, there is a very big kind of responsibility that you have to manage in these models. For example, you do not want to decline someone based on prohibited reasons. And the prohibited reasons are age, nationality, what sex you belong to. Like those things you cannot use, which are called protected classes, in order to make decisions. So these algorithms have to be trained using only what is permitted data from a legal standpoint in order to make this decision. The model risk officer's responsibility is to work alongside with the team in order to make sure that they are using the right type of data and information. They are not overfitting the model. Overfitting means it just works for a small data set, but not broadly. They need to make sure that the scores that are being generated for every customer are being calculated in the correct way. They need to make sure that wherever the decision is, let's say the score range is 0 to 1, 0 being kind of least risky, 1 being the most risky. If the decision is to really say, we're going to approve people up to 0.6 risk, from 0 to 0.6, because these are customers that I can afford to approve, the model risk officer's responsibility is to make sure that that is actually the right decision. So think of a model risk officer as a fiduciary responsibility to ensure that the right decisions are being made by using the allowed data that is allowed to be used from a legal compliance standpoint, making sure the calculations are correct, and ultimately, what is this for the sake of? That the customers are given fair consideration regardless of who they are in the decision-making process. So the person overseeing this is called model risk officer. Similar corollary to credit risk officer, which is when banks make offers. For example, tomorrow they decide to say, let's say, Gary, you have a card that has 1% cashback on it, right? Cashback rewards. And tomorrow the bank decides that Gary has been a long time customer. Their spending patterns suggest that they can use our card even more potentially if we sweeten the deal for Gary, right? And therefore they decide to make an offer that they say, hey, instead of getting 1% rewards, let's give you 2% rewards. Well, what's going to happen with that? Gary likely is to like it. Not everybody will, but Gary may. There is a chance. And Gary may start using the card more because of the rewards. 2% rewards instead of 1% rewards. And that spend will come from some other competitor cards over to the Capital One card, as an example. So there are financial implications of this type of change to the customer and to the company. The person who oversees this type of change and makes sure that it's actually a sound decision from both the customer and company standpoint is a credit officer, right? And so those are the two designations. Capital One has a very rigorous accreditation process for each of these roles, years of experience, years of making these decisions. They are supervised by a senior credit officer or a senior model risk officer to make sure that they are kind of you are calibrated with them in terms of assessments. And then ultimately there is a credit risk committee vote before somebody is accredited. So in summary, both designations are highly coveted, difficult to get designations, naturally given the fiduciary responsibility in front of regulators and for the customers and shareholders. And therefore, there are about 15 to 20 people that hold each individual designation, if that makes sense. And the part that I was fortunate about is because of my strong data science background. And at the same time, this ability that I talked about of really taking ownership of the business decision, the committees felt comfortable in awarding both designations to me. And therefore, I was the second person in the company who got both the designations to me. In terms of kind of how it changed my perspective, right? Like it's very simple. I'll give you a quick example of that. The thing that I really started thinking hard about is that I, as a credit risk officer, I do not want to approve a decision unless I'm really confident that the underlying algorithm is being used the right way. It is generating the right scores. It is being calibrated on a regular basis, because as environment changes, the macro environment changes, algorithms change and they move. So as a credit officer, I started asking those questions: is when did we last calibrate this algorithm to make sure that it works? What was really kind of the decision making around saying, hey, zero point 0.6 in the example that I was using is the right score? And that allowed me to dig deeper into the decision in ways that people without that knowledge will not be able to do. And vice versa, where the part that I was able to do as a kind of trained data scientist was able to really, I had the full insight, I would say, from nuts to bolts into what went into what and how to really, what are the things that could go wrong. And so, very importantly, I could point and say, hey, here are three things that can go wrong, because I know things from nuts and bolts. And then let's go watch those out so that they don't go wrong. And so that is in a nutshell my how each of these designations helped me.
When you went to CarMax, obviously you had to make a huge transformation,
Yes.
not only within the company, but yourself. How did you cope with that and how did you approach it?
Yeah, yeah. Reflecting back on those times, actually, CarMax was a surprise. I wasn't looking. Things like I told you was going great at
Yeah.
Capital One, and a recruiter called me while I was on vacation to India, and said, "Hey, are you interested in this role at CarMax?" And I was like, it's interesting. I love cars. And so maybe this is interesting to kind of look at. And they were also like, we have an auto finance business, and therefore I love consumer finance overall. I love lending. And so I did not want to leave that. And I was like, I get a chance to work in the auto finance business now, which is fantastic. And so those were some of the motivations. There was also an element of, hey, you come into the company at a senior leadership level, and therefore you have an opportunity to really influence the company's transformation and be part of the strategy development in order to make that transformation happen, as well as the execution of it. And that was very compelling to me, to really go to a new environment, build a team somewhat from scratch, and make this impact on this sort of transformation. So it was very exciting. To your question about what are some of the changes and transformation that I had to make within myself, the very first one is I had a 150 people direct reporting team at Capital One before I left, more like 500 if I include kind of the supporting departments. From that, I went to like 5 people team, and I had 5 open requisitions basically, right, to hire new people. So immediately, one of the things was I could ask my directs to build decks for me at Capital One. Here it was like, I'm talking to the board. I need to make my deck. And fortunately, Capital One helps you build PowerPoint skills like no other company. I had excellent skills. It was deploying and pressing then. So I got more hands on. That was a kind of immediate change. And I was fortunately very comfortable with it, unlike some people where I always had this like, I love the details. I love to put it on paper. And at the same time, I talk to the CEOs and the boards in a very comfortable manner. And so that was the first big change. The second big change was I realized very quickly that there is a 1:5 ratio, because for every person that I have on my CarMax team, I had 5 people on the Capital One side. And I was thinking, why is that the case? As to why this difference exists. And there is a very simple reason in my head why that exists is the margins in financials are high, 20% margins. The margin in retail is 4%. So just everything, whether you look at kind of the marketing budget, whether you look at number of people on your team, whatever that is, there is this sort of 1:5 ratio. And so I got to transform myself into do more with less. And that kind of was a mindset that frankly I didn't have to use much before, that I had to really put in use. That was the second change. The third change was really around kind of the breadth of my role increased significantly, right? The breadth part was something that I was looking forward to, where I realized quickly that CarMax is a big company. However, all the executives in the company fit in one room still, right? That was for a 15 billion company revenue. We all fit in one room. So, which naturally meant that decisions that I had to make at Capital One that had to kind of go up and down the chain in different directions. Whereas here it became 90% of decisions are mine concerning my area. 5% I would go to my boss and 5% go to his boss, the CEO. That was the decision making pattern that it kind of switched to, and I loved that part. But that was again a change and transformation. And the fourth funny one I'll tell you is that one thing that I was so used to was around at Capital One, there is PowerPoint for PowerPoint. So if you're having a meeting, we would always have PowerPoint for the meeting. Sometimes there are slides that we do even before to set up the meeting. So it's naturally wired, has many pros to it, absolutely no question. But at CarMax, I was like, there was a chat with my boss and the CEO, and I was like starting to make slides, and my boss was like, do you really need slides? Like, don't we have to have slides? And he's like, no, you don't. You can just draw things on the whiteboard and be done. And that was great. Like, I had to transform in that way, and that worked very well. The decision was done by drawing on the whiteboard, and that was a change and transformation in kind of in my personal habits, if you will.
Amazing. You've led everything from traditional analytics to generative AI. Where is AI truly creating value today, and where is it still hype?
Yeah. What a great question. The thing that I'll say, Gary, is the parts where the generative AI journey is there is absolutely no question in anybody's mind, should not be, about whether or not it is transformative, right? It is transformative. No questions about that. I do think that there are two pitfalls to avoid in how the world looks at it. Number one is generative AI is the right solution for every use case. That's what, if you just read articles that are floating around or people talking about it with authority, they will make you believe that's the case. And I'll argue that it is not. There are problems that generative AI is the right solution for, and there aren't. And I can give you a couple examples of that. The second pitfall is really how quickly people expect for it to generate value from the initiatives that you're owning, without thinking about, do you have the right underlying data? Do you have the right operational processes? Do you have the right set of people to implement changes? Without thinking about that, a lot of these value projections are created on the fly. And not surprisingly, there is many studies recently that talk about only 10% of pilots are succeeding and 90% are failing. And it comes to some of these common themes that I kind of talked about, right? So those, in my view, are the pitfalls of kind of really the AI, as people know today, is the Gen AI. And they are not thinking about whether or not the answers generated about the Gen AI tools, are they actually correct? People just mentally assume they're 100% correct, and they are not. We should know it, and then use that tool with kind of cautions around it to do your own checks to make sure whether it's accurate or not, right? So my thought is absolutely transformative, not the right solution in all cases, and just like any other tool, it makes mistakes and gives wrong answers. And do not expect to generate value from it unless you invest in the core underlying data, you invest in the right operational process transformation to fully benefit from it, and unless you actually invest in people who can actually implement these solutions in the company for you to benefit from.
How should leaders think about AI as an efficiency tool, a growth engine, or a long-term competitive moat?
Yep. I think the part that I'll say the most obvious kind of use cases that I see right now, and where I'm seeing success with clients at CarMax, where I sponsored a lot of these efforts, they largely fall in the efficiency and long-term competitive advantage bucket. I would say that I am not seeing a ton yet in the growth engine kind of vertical that you mentioned. And I'll tell you why that is the case. If you look at in the efficiency bucket, there are tons of cases. I'll use two examples, one in the call centers and second in programming, which is where the tools are adding tremendous amount of efficiency. Agents on call, they take say 5 minutes, 8 minutes to answer a customer question because they have to research a lot. Those questions can be answered in seconds if the underlying information, correct information, is exposed to the LLM, large language model, to be able to answer these questions. That's doable, going from minutes to seconds. And there are a lot of companies investing and realizing benefits of that. The second part, programming, is the biggest use case in my view that I've been talking to a bunch of my friends who are aces at programming, and they say some of the newer tools are able to basically write code that is 80% accurate. Wow, that's amazing, right? That these are people who I would consider the best of the best programmers, and they are saying that means something. So the efficiency part is very clear. That's the direction sort of it's going in, and you're realizing the successful pilots are mostly in that bucket. The long-term competitive advantage part is around really everybody is going there. Can you start investing in it so that you are building kind of the right fabric across the company in terms of developing these tools, applying the right sort of applying them the right way, building processes that allow you to do that. If you don't have data in the right spot in certain places in the company, you start working on that. So I think the companies that are taking that view of I want to build long-term competitive advantage with these tools are the ones investing in some of the things that I talked about. And so the companies that are not investing in those and just doing lip service around AI, and boards are asking, people are just jumping and saying, what can I do? What can I do? Like they are not thinking about the competitive advantage aspect of it, and will therefore be the laggards and will get hit as things transform and move forward. The middle bucket around kind of the growth engine piece of this is what I don't see yet is really kind of, I would say, large customer facing kind of innovations. There is lots of things that are going on, I would say, but I don't yet see where there is this sort of massive customer facing transformation that leads to growth. And that kind of comes from AI. And I think it will take time. It's a matter of time, it will be there. But I don't see that. I largely see things fall in the efficiency bucket and also in the competitive advantage bucket where the work is happening as I see it right now.
You spent a lot of time in corporate life,
Mm-hmm.
and then you became an entrepreneur.
Mm-hmm.
What finally pushed you to make that move? And in doing that, what made you decide what your new offering would be, and how do you present it? How do you sell it?
Yeah, yeah. Reflecting back on the times, like I told you, there is this piece on entrepreneurship that I've had in my mind for a long time, and why I'm kind of really why I was so enamored by it or have been is I have tremendous respect from people who can kind of go from zero to one, and there are names and names of multitudes of examples who have gone from that zero to one. And I have some of my role models that I look at, the Tatas, for example. They rose from nothing to this massive industrial, highly respected kind of industrial group across the world, as an example. There is stories around, of course, the Apples of the world and how it started where it is, Google, name it. And so I've followed some of these stories and the leaders who created them. And that has been a part of what has influenced me to say, hey, I can make things grow from, say, a 2 to a 5, 3 to a 6. That is exciting. No, don't get me wrong. And I may end up doing that some point of time. But if I can figure out how to scale something from 0 to 1 and do it in a way that I'm truly enjoying the work that I'm passionate about, nothing like it. And that has been this sort of goal in my head. Now, timing aligned with what I was trying to do was I talked about two of my partners, highly regarded senior executives, ex Capital One. One of them was my boss for a period of time, other was my mentor. And I was talking to my mentor, and he was like, "Hey, me and Don, his name is Rob Finnegan. He was planning to start this with Don Busick, and he was like, "Do you want to join us?" And I was like, "Wow, if I'm doing something like this, what a great group of people to work with. Let me talk to my wife." And she was kind enough. She said, "Hey, you've been talking about this for years. If you are to do it now. Otherwise, you will never do it." So I'll owe it everything to her. Without that, I could not have made the jump. She supported me, was very confident that if I do something, I'll succeed. And that made me jump with two great people that I thought we start with. In terms of the offering, we thought about what we want to do. Like I told you, consulting is a great gig for all of us because of very rich set of experiences that each one of us had, and the desire to then apply those in tough problems to help solve tough problems was something that gives each one of us a kick. Like, hey, I'm working with a client. The client is a small company. They don't have the ability to hire a person like me with a full-time kind of compensation package. I can work with them as a fractional person. I still put in my full to help them. And that company raises, for example, they're looking to raise funds. And I'm able to help them because of my knowledge, experience, the stature, the connections in the financial world. That is an amazing outcome for this company to succeed and to help me to be part of that journey. And at the same time, you're doing things from scratch. You're doing things that I needed to do like 22 years back, and get into valuation models, get into Excel and fix things and coach people and train people. So that part of what the offering was from a consulting standpoint of tough intellectual problem solving was very attractive to all three of us. And that's why we chose that field. And then finally it came to like, what is the industry that we go after? And it made so much sense to start with fintech and banking as our starting industry because that's what our expertise in future we may expand kind of our verticals in terms of what industries we go to, but this was kind of a great starting point. And then we came up with like what makes more sense. Started with this kind of finding this cool name to then saying what are the verticals that we want to offer, and kind of looked at our skill sets and arrived at the verticals that we consult on, which are credit risk, marketing analytics, technology enablement, and then digital product development are the verticals that we support. So that's kind of the story of how Arika came into being.
In your new business, when you walk into a new client, one of the first signs that you notice that means you can make meaningful transformation?
The first and foremost is the client wants to change and transform. Number one, right? There is nothing without that. That mindset of I am doing well or I'm not doing well, whichever that is. When it's not doing well, it's super clear. When I'm doing well and I still think we can do better and help us do that is a mindset that naturally is going to lead to transformation. The second part is around when we talk about, there are clients that are very open and they'll say, hey, there are no sacred cows here. Like, just we bring you here so that you can help us change and transform. Versus incremental improvements. There are some clients that don't want a massive transformation. They look for incremental steps, and that's fine too. Like, it's not something that we kind of work with the client to tell them what the opportunities are, kind of do a diagnostic project, if you will, to show them what the opportunities are, and then consult with the client, work with the client to pick a path. Some pick the path of transformation, some pick the path of incremental improvements, but we at least have shown them the gamut of what is possible.
When I mean, we're almost done, but if you had to improve a financial services firm's results by say 30 to 50%, where would you focus first?
The first part to me is once I kind of inherently understand what the business is about, right? That is critical. I want to spend time there. Once I totally understand that, the first and foremost to me is kind of what is the revenue, what is the cost, out of the revenue, are we seeing growth over the last whatever time period? Same with expenses. Are they in line with each other? Are they out of whack? The basic sanity checks, if you will, and then really looking at kind of the revenue to see what are the biggest drivers where we are generating money from. Is the product/products, is that a good product market fit or not? Are we managing losses well or not out of the expense line items? Are they in line with the industry, below the industry? If so, why? If so, dig into that. Because if you manage losses well, the financial business is going to perform well, and otherwise you're doomed, right? And so therefore, this is what I end up doing typically to see what is going on there. And then it's from there, that's kind of the growth plan. Typical signs of when growth is stunted is either because the product market fit is not great, in which case you're talking about alternate products and what could those be, or because the population that they're targeting is narrower than what it could be, or the wrong population. So you kind of improve that in terms of who are you going after. And then there are other elements of, as long as losses are being managed well, there are other elements of, are we spending enough on marketing, as an example? What does it look against competition? What are some of the leading companies doing? And what are we doing in order to get there? So I'll sum it up as identifying what are the most critical revenue drivers, whether it's population, product and market fit, whether it is the marketing elements of reaching enough number of people, and then loss management. And if you kind of look at those, it usually tells you what the answer is in order to drive to that type of growth.
So just in closing, you built a career across two major institutions and now your own firm. So just tell me before we go, what does success look like for you over the next 2-3 years?
Yeah, the best thing, Gary, really trying to build towards is we are a consulting firm that is trusted and reputed for the excellence of work that we do. That's what we are building towards. The brand Areca should be equated to excellence, is what this is all about for us. And so from that perspective, the signs of success, if we are doing that, are going to be, are we generating repeat clients? Do we actually not need to market? And we are largely word of mouth in terms of kind of how people get to us. Of course, is there a deal flow of clients that we can be proud of? Those are some measures, but it is end of the day, trying to build a consulting firm that is known for excellence is our goal. How big, how small it frankly is an outcome. It doesn't matter a ton. Of course, it matters from kind of the financial success and all that perspective, but that's not what this is about. It's about excellence and our name being equated to that.
Fantastic. What's the full name of your new company?
Areca, Arica, Areca. And the website is www.arica.co. It's not com, it's .co. That's kind of our website. So go check it out when you get a chance.
How do you, just one last question. How do you charge?
Well, two models that we follow. One is a project-based model, and then the second is retainer-based model. The project-based model, as the name suggests, is finite time. It's 8 weeks, 12 weeks, and there is a specific outcome that the client is looking for. For example, really come review our current credit infrastructure and decision making and come back with improvement opportunities and a roadmap, and tell us like value of actually transforming, right? That's a project. It's finite scoped project to go do that. The second is retainer. Retainer is where, as again the name suggests, we join your team. We join your team as a fractional chief risk officer, fractional chief marketing officer, fractional chief data officer, or senior marketing advisor, senior risk advisor, whatever the need be. And that's where we are embedded with your team. And there is certain number of hours that we are committed to work with your team, but we go above and beyond to make sure that you reach the outcome that you want. And that may be a chief risk officer support, that may be senior marketing advisor support on a particular initiative. But that's where we become part of your team. And many of our clients fall in that bucket. They start on the project based and then they hire us on the retainer, where I've been with a client for about 14 months now in the retainer capacity, right when I started. And hopefully that continues as long as they need me. So that's kind of the bond of trust that we end up building with our clients. And the pricing is based on the model and the scope as to what we do.
Fantastic. Gautam, if people want to get hold of you or listeners want to learn more about what you do and what your company does, how can they get hold of you?
Yeah, so again, like I mentioned, the website www.arica.co has all the information. They can look me up on LinkedIn and hit me up on LinkedIn. That is another way. And then, of course, they can send me an email. My email address is Gautam, Gautam, at arica.co, arica.co. So any of those are great.
Fantastic. Gautam, well, I really enjoyed this. It's one of our longer podcasts. We probably could have spoken for another hour, had the recording allowed it. But, just signing off, I just want to say thank you for attending. I'm Gary Wayne. Thank everybody for listening. And you can find me on LinkedIn and on my webpage as usual. I look forward to doing the next Wise Tech for Wise Money. And Gautam, I look forward to talking to you further. Thank you very much, everybody.
Thank you, Gary. Thank you, everyone. I appreciate the time and opportunity.
Welcome. Cheers.
Have a great day. Bye.